Hey everyone, welcome back to Corporate Decoder, the place where we decode those piles of corporate filings to find the juicy and sometimes not so juicy truths. And today we're diving into Aether Holdings IPO. Be ready because this filing is packed with some really interesting and frankly wild financial decisions. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so join us there to continue the conversation. Alright, let's get straight to it. Aether Holdings is gearing up for an IPO looking to raise up to $40 million by selling units. Each unit is a package deal, one share of common stock, and one warrant to buy more stock. They're also offering pre-funded units for those who want to avoid owning too much of the company right away. The big news here is their plan to use a huge chunk of the money raised to buy Bitcoin. Yes, you heard that right, Bitcoin. They're really leaning into Bitcoin, calling it a reliable store of value and a hedge against inflation, comparing it to gold. Now they do acknowledge Bitcoin's extreme volatility, mentioning prices fluctuating wildly in the past year, but they seem pretty bullish, even noting that as of December 2024, gold's market cap was a massive $18 trillion compared to Bitcoin's $1 trillion. They're betting big on Bitcoin. On the business front, Aether Holdings operates financial technology, or fintech, by offering research, analytics, data, and tools for traders through their platform sentimenttrader.com. They use data from big names like Bloomberg and the Chicago Board Options Exchange to power their analysis, and they're planning to use more artificial intelligence or AI to make their services even better. They even recently made a few new subsidiaries to help with their newsletter business, financial tools, and innovation. Now let's talk numbers, because this is where things get really interesting. Looking at their financials for the 6 months ended March 31, 2025, they reported total revenues of about $696,000. That's a dip from the same period last year when they pulled in around $730,000. And while revenues edged down slightly, their general and administrative expenses shot up. For the first 6 months of 2025, these costs were over $1.1 million, a huge jump of 57% from the previous year. A big reason for this increase seems to be higher professional fees, likely tied to getting this IPO ready, and also more executive and director compensation. All these changes led to a significantly bigger loss before taxes. For the first 6 months of 2025, they reported a loss of about $776,000 loss in the same period last year. Now let's look at the effects of this offering. Post-IPO, assuming they sell all the units and don't sell any pre-funded units, they'll have around 15.4 million shares of common stock outstanding. And here's a big one for potential investors: dilution. If this offering goes through at the assumed price, new investors could see an immediate dilution of about $9.23 per share. That means the value of their investment compared to the company's assets per share could be significantly lower right out of the gate. Keep in mind, after this offering, their existing major shareholders, directors, and officers will still hold a significant chunk of the company, around 52%. This means they'll have a lot of say in how things are run, which could be good if you trust management, but might limit your influence as a smaller investor. Now let's dive into the risks. Like many early stage companies, Aether Holdings has a limited operating history and an unproven business model, which they openly admit. They've also incurred losses and expect to continue doing so for a while as they try to grow. A big concern is their reliance on attracting new users and keeping existing ones. If they can't do that, their revenue will suffer. They're also using AI, which they acknowledge comes with its own set of risks, from operational problems to legal trouble and privacy concerns. Plus, they're heavily reliant on third-party data for their AI, and losing access to that data, or if it's inaccurate, could really hurt them. And then there's the Bitcoin. They readily admit the strategy exposes them to all sorts of risks associated with Bitcoin. They're subject to Bitcoin's wild price swings, which will definitely affect their financial results and stock price. Plus, there's the whole legal and regulatory uncertainty surrounding digital assets. What if Bitcoin gets reclassified as a security? That could cause major headaches for them. Their financial statements, even the upcoming ones, won't fully reflect their Bitcoin plans. They acknowledge that their Bitcoin holdings will be the majority of their assets, and this will create a lot of variability in their earnings. To sort of calm things down after the IPO, their directors and officers are agreeing to lock-up periods, meaning they can't just dump all their shares immediately. This is pretty standard practice to prevent a flood of selling that could tank the stock price right after going public. Looking at who owns what, Nicholas Quanmian Lin, the CEO, and his related entity, Up and Up Ventures Limited, will together own about 25% of the company before the offering, and about 15% after. Elixir Technology Inc. also holds a significant stake. For directors, it seems they're not getting paid in cash for their services on the board yet, but that's expected to change after the IPO. For example, the director Jacqueline Wu will receive $50,000 as a fee, and Nicholas Lin is set to receive $120,000 annually. Now, let's do a quick dive into the actual financial statements. As of March 31, 2025, their cash balance was down to a little over $93,000. That's a big drop from about $557,000 at the end of September 2024. And their liabilities are quite high, over $964,000 at the same date, leading to a negative stockholders' equity of almost $600,000. Essentially, they owe more than they own at this point, at least on paper. The net loss for the first 6 months of 2025 was substantial at over $712,000, as we saw reflected in their income statement earlier. Looking at their costs, wages, and benefits for research analysts are a significant expense, over $93,000 for the first half of 2025. But overall, their cost of sales decreased slightly, which is good. But those general and administrative expenses are really eating into their profits, and that seems to be the main driver of their increased losses. In terms of cash flow, they used about $361,000 in operations during the first 6 months of 2025, which is more than the $157,000 they used in the same period of 2024. Financing activities show a small outflow of cash in early 2025 compared to a significant inflow in early 2024, likely from previous funding rounds. So what's my take on Aether Holdings? This is a classic early stage tech company story, but with a spicy twist of Bitcoin investment. They're clearly trying to capture growth by expanding their platform and services, but their current financials show they're burning cash and not yet profitable. The big bet on Bitcoin is a high risk, high reward play. If Bitcoin prices soar, they could see massive gains, but if Bitcoin tanks, it could be disastrous, especially since they're planning to put most of their IPO money into it. The increased expenses, particularly in general and administrative areas, are a red flag that needs careful monitoring, especially to see if they can translate that spending into actual user growth and revenue in Aether, and not yet profitable. The big bet on Bitcoin is a high risk, high reward play that needs careful monitoring, especially to see if they can translate that spending into actual user growth and revenue. The dilution also means existing shareholders and those buying in this IPO will own a smaller piece of the company, pie per dollar invested, making the valuation even more critical. In conclusion, Aether Holdings is a company with ambition trying to revolutionize financial tech with AI and a massive Bitcoin investment. However, they're in the very early stages, facing stiff competition, mounting losses, and the inherent volatility of their chosen treasury asset. It's a story that will likely play out dramatically. Alright, that's our breakdown of Aether Holdings IPO filing. What's your take on these numbers and what they signal for the company's future, especially with that big Bitcoin move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.